Here's our forecast for the month of November 2024. Getting started, we're going to go over the interest rates, where we think home prices are going, commercial real estate. We're going to talk about sellers, buyers, what's coming up next, and what we are doing with our own money. Currently, in the current market, we're looking at a median home price of right around $380,000. That's for south side of Hampton Roads, detached homes. There's a whole bunch of different ways to look at the numbers. Days on market is steady year over year at 20 days on market, giving us a month of supply of only 2.2 months, which means we are still in a seller's market. Put in a little parentheses because it's a little sellers, but definitely still a seller's market. So sellers are in control. Sale to list price is actually down a little bit, 99.5%. So people are listing their home pretty accurately. And if they market it well and list it accurately, it is selling quickly. Interest rates as reported by Mortgage News Daily, snapshot in time today, we're looking at 7.05% for a 30-year conventional loan. VHA and FHA loans are typically lower. Right now we're looking at a 6.39 reported for VA. Folks are getting less than that. If you want to get a VA loan, we have some great lenders that we can hook you up with. For the ARM adjustable rate mortgages, they're reporting 7.11. We did just get a non-warrantable condo in a rural area, and we got 6.875 on a 10-1 ARM for ourselves. So they are definitely less than what is showing right there. Commercial DSCR loans right now between the 6.5%-8% if you're in the investor space. Forecasting rates. So looking at what Fannie Mae is predicting, looking back last week, they were predicting that we're going to see 6% by the end of 2024. I think that's aggressive. I don't see it happening. And they're predicting 5.6% for 2025. The FOMC is going to be dropping rates. They expect December 17th and 18th of another quarter of a point. It's not a direct line, but it does influence things. Our forecast for 2025 is that interest rates are going to rattle around between 6 and 7%. We're on the high end right now. If you take a look at that graph, you can see, hey, we're kind of peaking out. And I think we're going to pull back a little bit. So interest rates, I do believe, are going to fall before they go up. Looking at home prices, if interest rates are steady, I anticipate that home prices are going to continue to rise at a nominal 2 to 5% per year. And if we look at the long-term trend going back to 1980, I think I have on this chart right here, you can see we are pretty much on a long-term trend line. That's an exponential trend line we got drawn on there. And we are right back at the trend line. Now that's nationwide. If we were to drill down into Hampton Roads using the Fred economic data for the home price index for Hampton Roads, it's tempting to think that perhaps we're a little overpriced compared to that trend line. I will say that although it's tempting to say we're overvalued, supply and demand says we're not. In 2021, we had a housing shortage of 4.3 million homes, and that number's only grown. Until that problem is solved, home prices will continue to rise. There is no way we will see a pullback on home prices while we are still short almost 5 million homes nationwide. Therefore, home prices are going to continue to go up. On the commercial real estate, things are a little bit different. In the Financial Times, they're talking about extend and pretend, which is going on because of the risk of double defaults in some of the commercial real estate space. Now, according to CoStar, is reporting per this graph that we're seeing a lot of retail store closings across America. You can see there was a huge spike even before COVID that has come down. But now it's starting to rise again. Now, the thing is, it's kind of I think a doom and gloom, the Chicken Little thing, because they talk about they're at the same time that there's store closures are at the highest level since 2020, the low vacancy rates and high demand for retail space, especially from grocery, fitness, and healthcare, are expected to quickly absorb any vacancies. So I don't even know what the point of that article was, because what they're saying and what I'm seeing on the graph just doesn't buy with the headline. So I don't think we're seeing nearly the problems that people are hoping to see. I don't think there's going to be this huge default or a crash in the commercial space. Well, what does this mean for you? If you own a home right now and you're thinking about selling next year, you may want to consider selling in the spring. If that's the case, we definitely want to start preparing in January. If you want to be on the market as soon as March, we're already meeting with clients right now to talk about setting up some home sales in March. Presentation matters. If you price it right and present it well, you're going to get offers and you're going to sell for a good price. All right. On the other hand, buyers, rates may fall. And if the rates fall, a $400,000 loan becomes much more affordable. However, that home that was $400,000 is now worth $450,000. what's going to happen is we're going to have more and more buyers coming on the market, driving up the price in the springtime. So although there'll be a higher supply, there's also going to be a lot more buyers. If you see a property you like right now, don't wait. Go ahead, grab it, get something, stay within the numbers you can afford. And if interest rates pull back, you can always refinance. But don't pass up an opportunity right now thinking that it'll become more affordable next year. That is, I don't think that is a good plan. Okay. What are we doing ourselves? We're buying investment properties. We are actively buying. We just bought a property back in July. I mentioned we were going to do an Airbnb. We decided to turn it into a long-term student rental. We are also actively making offers on apartments locally and looking at areas at apartments outside of the area. We thought about the Airbnb thing, decided that that's not for us. We're just not going to do that. And certainly not anytime soon, right? As far as our personal home, we're always looking, but we're not doing anything right now. We are staying put, as are most of you. Big news for us. We launched our own brokerage. We are Dash 2 Real Estate, your real estate wingman, and we are super excited about that. And what does that mean? It means that if you have any friends or family that are thinking about making the move or have any questions about it, we are never too busy for your referrals. And all you have to do is send us their name, send us their contact number, and I will promise that we will take great care of them. So this is us, Dash 2 Real Estate. It's Alex, it's me, it's our son Mitchell, and look forward to a launch event in the month of January. Invitations going out soon. Talk soon.